Attention A1 Trading Show fans, if you're interested in getting free access to the Edge Finder or our premium trade alerts, listen up. For a limited time, our show's partnered broker 8cap is giving out free access to our products when you sign up for a new trading account with them. If you already have a broker, you may want to consider switching to 8cap because of their low trading costs, a wide range of trading assets, and their amazing customer support. If you'd like to get access to our software and Discord server for free, click the link being dropped in the chat right now and ask one of our team members for more information. Don't miss your chance for free products and an award-winning broker. Now back to the A1 Trading Show.
All right, guys. Good morning. Welcome back. Good afternoon. Check out the stream layout we got here. This is pretty cool. Hold on, I gotta play my my intro music. I feel like it's kind of a vibey. Yeah, there we go. A little vibiness for your morning, your afternoon, wherever you are tuned in. Love the orange. Love the fall stuff. Does anybody else absolutely love fall, like just in general? Like it is just. Some people I know a lot of people are like bummed out that summer is ending. And if you're somebody in Australia, you're probably excited that winter is ending, or South Africa or someone from where it's cold right now. You're probably thrilled that it's changing, but some people are bummed out that summer is, slowly coming to a close. But I am just, if we could just have fall weather all year long, I think maybe I eventually would get tired of fall, but it would take some time. I like fall weather a lot. You know why I love fire? I mean, why I love fall is because of fire. Like it's such a cool, I love like bonfires and sitting outside, football season kicks back up in the US and that's always fun. I live in Scotland. It's permanently fall. Really? Does it not get like really cold there? I feel like it gets really cold there, but I bet you do get a long, like, beautiful fall season. I think I've heard that. Don't know why, but fall feels a bit nostalgic. I totally agree, Basha. That is so true. I don't know what it is. That is like the feeling of fall. Fall is like nostalgic. That's like the best way I can explain it too. Anyways, guys, speaking of falling, we've got the indices coming down lower here today. Many of you know that I stopped out a lot of my stuff yesterday. So I'm out of the S&P 500. After we broke this level here, I got stopped out. And there's a couple things I want to talk about here. How can James, I saw your question yesterday. I was watching it back. I saw your comment. How can I trade S&P 500 in the US? That's a great question. So I will share with you what I use. Chandler or James, if we could drop the link to Webull. This is the brokerage that I use. And full disclosure, this is a referral link. If you choose to use it, you'll get free shares when you sign up, and we get some kickback here on the show. If you'd like to support us, consider using Webull. That is the best brokerage for US traders. Now, if you're someone in the US and you're trading with like Oanda or you're trading with Forex.com and you're wondering why can't I trade indices or gold, etc., it's because in the US we can't trade CFDs, which XAU, USD, NAS 100, SPX500, those are CFDs. So we can't actually trade them. Even though I look at them as gauges, what I actually personally trade is ETFs like SPY. You can also trade futures contracts with a futures brokerage. But for me, I prefer trading ETFs. So if you are looking to trade the same concept that I do, which is on Webull, consider using this link and it will get you some free shares upon your sign up. That is available in the UK, I believe Philippines, Singapore, US, a couple other countries. Yeah. Looks like it's not Forex style. Yeah, no, it's not Forex. We can't trade Forex or CFDs for US indices. You could either trade it on the futures market, or you could try out what I use, which is ETFs, which I find to be very simple. You're just buying shares, selling shares, very straightforward. So speaking of shares, I ended up stopping out of my position here yesterday. So if I take a look at the 4-hour chart, as soon as we broke this level of support on SPY, that was my trigger to go ahead and take profits on this move that I traded from the near the lows in August, rode it up here, trailed stops. And, after this consolidation zone, I was looking for, something like this, and we did not get, we got the break to the downside. So as we look at the indices here this morning, the question then becomes, how much more can these indices drop? And the answer is, we may have lost a bit of our momentum here. And with September seasonality being not great for indices, could be rough. Ivan told me about the fall in the SPX, NAS, and US 30. Ivan, where did you tell me that? I'm not sure where you told me that. However, we discussed yesterday on stream, I pointed out the seasonality here for, let me pull this up. Seasonality for the indices is not great. It's not great for the month of September. Let me pull up seasonality to show you this. I made a video yesterday talking about this. When we talk about seasonality, this is the month of the year that has historically been the worst performer for indices. Now, again, I mentioned yesterday, I don't sell just because seasonality is bearish, because that doesn't necessarily guarantee anything, because we're going into an election cycle. There's some volatility there. The markets could easily be up by the end of September too. But right now, there's enough weighing factors here on the Edge Finders calculation to keep me from entering new trades for now on the indices. And we have bearish seasonality. So again, doesn't tell me I need to necessarily sell or get short the indices, because I don't have that strong confirmation. But if we take a look here, neutral readings, you can see the indices are no longer here. TLT, however, has popped back up. I'd like to take a look at treasury bonds as well. So yeah. So indices, again, they were on the bullish camp in August. I was very bullish throughout the entirety of August. And made some really good money on the indices. But today, with yesterday's break of structure here, that was my trigger to go ahead and take profits on the move. And I would not be surprised if September is a bit of a rough month here for the indices. I'm not necessarily thinking we crash. Otherwise, if I thought that, I would probably look to get short. I don't think we necessarily short. Fall, straight down. I just think that it's probably a time for caution. It's probably a time for gauging with some of this economic data this week how things look for the Federal Reserve's interest rate cut, which is expected to happen September 18th. The Fed is going to cut rates on September 18th. It is basically a certainty. They have said that much. They said that's their plans. We know rate cuts are coming. The difference, however, between now and then is what the data looks like coming out. So what I'm talking about is last month, when we took a look at NFP, and NFP came in real poor, right? When it missed, the market really hated it. So this Friday, we have the next NFP report, and it's very curious to see what that data comes in as. Is it going to be strong? Is it going to be weak? That is so important. And by the way, if this number comes in strong, boom, I'm probably back to long the indices. If it comes in real strong, the market may freak out about like, oh, rate cut's not going to happen, but that would give me confidence that the economy is not falling apart, and I would probably look to get long indices again. So it's pretty binary. On Friday, it is a pretty binary case study for me. Today, we have JOLTS jobs data, which is important, and we've got that. We'll be covering that here in just a little bit. But we've got a lot of stuff. We got a lot of data coming out the next few days, guys, and I hope you're ready to strap in and focus. We got 488 people here today. If you are enjoying the stream, do me the biggest favor today. If you're enjoying the content, hit the thumbs up button, subscribe to the channel. If you're watching on YouTube, if you're watching on Twitter, make sure to leave a heart on the video. It really does just help to support the work that we're doing here, trying to put together shows that are helpful to traders trying to get involved with fundamental analysis. I know that it can be, fundamental analysis can be very overwhelming to new traders at start, but it's not that bad. And if you hang around and subscribe, watch how we learn things together. That's the whole point of the show. We learn every day. We get better at fundamental analysis each day. So, Nick, can I trade Webull? Can I trade CFDs on Webull in the UK? I don't know. I think you can trade. I don't want to mislead you, so I'm not sure. You'd have to look. Okay, so let's take a look at where we're at. Okay, let's do a quick economic pulse check here. Okay, we're going to run through some stuff. GDP numbers coming in strong. Good news. That's strong for the dollar, and I would argue also strong for stocks. I want to see GDP growth. Services PMI, we get this data, by the way, tomorrow. Very important data point. Very, very key. One of the most important data points of the week is the services PMI data, which last time around saved us from that Armageddon, Black Tokyo Monday that we saw, the big sell-off in Japan. Services PMI rushed to save the day last time around. Will services PMI help us out this time? That is really what is important. Okay. So next up, we take a look at manufacturing PMI, which came out yesterday about in line with expectations. Nothing great here, nothing horrible here, just about expectations. So that's kind of a wash. Manufacturing has been consistently a bit slow in the US in the last few years. Fortunately, in terms of manufacturing, it is a smaller part of our economy. The US is a very services focused or services heavy economy. So let's keep going. Retail sales numbers came in really strong. This was a positive thing. So I'm actually overall, I like where things are, and I want to show you the summary in just a second. NFP, kind of weak last time around, actually straight up weak. ADP, also weak. Take a look at unemployment claims. Unemployment claims have steadied. At least they're not like rising dramatically, but they're still, they're rolling in. So we'll keep an eye on that tomorrow. Job openings, JOLTS. We're going to get this here in just 30 minutes. So we got JOLTS numbers coming out here this morning. What we want to see, guys, if you're someone, looking for stock market bullishness, what you don't want to see is you don't want to see this number just drop really hard. You want this number to stay flat, because if JOLTS job openings in the United States are steady, then that's okay. But if they're falling rapidly, that would signal perhaps a recession could be coming, right? So that's a recessionary signal. We also have unemployment rate this week coming out, which has been rising. So and this chart looks a bit extreme, but I can mute it just a little bit by, let's go take a little bit further back. We've seen unemployment rate drop down to at its lows 3.4 3.5%, and it started to rise here again. So we are seeing unemployment rate rising, but please don't let this chart scare you too much. It looks a little aggressive, but still, even all of this entire chart is at very historic low levels of unemployment in the United States. And to give you some reference, I believe that the long-term average US unemployment rate is about 5.7%. So it is rising, but it's not at a critical level by any means. Okay. So something to think about there. Wage growth in the U.S. has slowed pretty substantially, 3.6%. This was a large contributor to inflation. So seeing this number coming down has been a positive signal to the inflation story, which is now kind of on the back burner. Speaking of inflation data, let's take a look at inflation data in the U.S. You can see here we've had a nice steady overall decline in inflation and disinflation. The disinflation trend seems to still be intact here. That's good news. We don't want to see this spike up. That would be a cause for concern. So I hope by going through that, we explained a little bit of the state of the economy, and what might be helpful to you guys is this summary table that I built. I built this. If you go to the data scanners page, which I need to do this for gold, I keep saying I'm going to do it, but it's a daunting, tedious task to build these tables. So I gotta do it. But check this out. So we look at the S&P 500. You can see we're getting a neutral reading. On the economic data front, we've got a couple blues here and a couple reds, slightly more blues. So what the heck does that mean, Nick? Dumb it down for me. Make it as simple as possible. Okay. If it's getting blue, it's positive. for the stock market according to our, traditional analysis. And if it's red, it's considered bearish for the stock market. Now, in the future, I will be replicating this chart for each one of these sections within our software. Okay. So hold on to your butts here. We will get that set up. I know people have been sending DMs already like, Nick, can you please do that for gold? And I'm like, yes, I know. But this takes a lot of time to build these charts. So I will have that, built at some point here. We'll get that sorted out. Anyways, we could run through this. Basically, when we look at GDP growth, manufacturing PMIs, services PMIs, retail sales month over month, the numbers here have mostly been positive. We've seen some things that are coming in not as positive, like the employment data, right, et cetera. So the overall kind of summary there has been not so bad. Also, I need to check this because this seems wrong. Manufacturing PMI it's not a positive. It should actually be a negative. So I'm actually going to write that down. Hold on. Okay. The scoring is correct, but for some reason I've messed up this table. I need to check that because that actually should be red. So about in the middle, we've got four blues, four reds. So the economy, I would actually argue, is in an okay spot going into the first rate cut. So I am generally bullish on the stock market, but we have some negative stuff to factor in too. Look, seasonally, look at this. Seasonally, where we're getting a -2 score, because this plays a big factor, is this right here. The current month of September is historically a not positive month for the stock market in the last 10 years. Okay, so we need to think about that. That needs to be factored into our scoring and our decision-making process. Okay, this is how we use the Edge Finder to avoid bad trading setups as well as find better ones out there. Does that make sense? Type yes in the chat if this breakdown was helpful to you by taking a look at the economic data. I know we haven't been looking at a lot of price charts, but I wanted to make sure that we're on the same page with the state of things as we get a lot more economic data over the next few days. I want to make sure you guys are up to speed on that. Does that make sense? Type yes in the chat if that makes sense. So that's what we're looking for. US 30 is slightly up today. Impressive. NASDAQ's lower. SMH. I got stopped out of SMH here. Once it broke through here, I had a long entry over here, rode it up here, had my stop loss below this level. So when it broke lower yesterday, I ended up taking a profit on that one. Okay, lots of yeses in the chat. Thank you guys for that feedback. That does help. Okay, so that's kind of the synopsis is we're still sitting in neutral. We know that October, November, December, October's still kind of rocky, but November and December are very good months historically for stock market. So I'm watching the indices in the next few weeks. I also want to update you guys on my position on gold. So I am still long gold. This thing has been, sideways here recently. My thought process on gold really simply is that if we break through these lows and we can't hold support, I've got to stop out. But if we can push higher from here, if we can take through the highs, then I'll be able to trail a stop and move things into profit. But this one's been really, kind of testing my patience, to be completely honest. Like I've been just watching this thing trade up, trade down, trade up, trade down. I mean, this is day 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. This is day 10 of watching this position. And it's kind of just gone sideways. But I think that you're probably going to get some more decisive price action in the second half of this week because you have jobs data coming out in 20 minutes, then more jobs data and services PMI data coming out tomorrow. And then you have on Friday, the big one, you have NFP. So you have a lot of stuff coming down the pipeline. Now, the Edge Finder does not currently have a bullish setup on gold. So why am I long gold? Well, it had a bullish setup 10 days ago when I took this position, and I close trades based on technicals. So if gold, it's getting a neutral reading on the edge finder. So if gold breaks through that, I need to just close out. Like there's nothing left for me to hold on to the trade. But the technicals looked really good here, as well as the fundamentals at the time of me taking the trade. I'm just going to hold it. If it doesn't, if it doesn't hold support, then I'm out. And if it can rally through the highs, then I can start trailing a stop and trying to lock in profits on this one. Now, what you're looking for in jobs data this week for gold would be weak jobs data would be good for gold, right? Because that would probably make people a little bit concerned about the state of the US economy. More rate cuts would become expected, which would, again, more rate cuts, very positive for gold, could send it through the highs. We don't know that to be true, though. If data comes in very, very strong and stable, gold's probably going to, roll lower. So, yeah, something to think about. But in terms of current positions, you can see I am a lot lighter today. I do have a couple stocks open. Nvidia has come all the way back down to break even for me. I've got a couple individual stocks I'm still holding on to, like Tesla. My gold trade and my IWM trade, I'm still in this one as well. So here's IWM. Same concept here. If we break through the support level, that's going to be my point to take profits on this trade. So that's what I'm looking for here today. Either price drops, breaks, takes me out, or we rebound and I can start looking to, watch the Russell, see if we can actually start taking out highs, in which case I could trail some stops. All right. So, yeah, keeping an eye on that one. Let's see what else. Individual stocks. Most of these are like long-term small positions in my account. So I'm not really too enamored by trying to do anything or make any moves on them. Let's see what else. Dollar index really quick. So take a look at the daily chart here. In fact, let me check something. Pound dollar is back on the top setups page. Okay, let's take a look at that. GBP USD. Did we get some data from the UK? Like what changed here? Can I see that? Nickel oil has fallen a lot. Trading at support. Is it a good place to buy, or should we need any fundamental news that will be? Good question about oil. I don't personally right now have any immediate trade setups on it, but I will look at it in just a second. All right, pound USD. Let's take a look here. Okay, trend flipped to a more positive reading. That was the change in score that got us into bullish territory. Okay. Employment data favors UK. Okay, let me look at the pound. So pound USD, I've had this level marked up on my chart for a few days now. So if we get a drop down into this 38.2 or the 50% retracement level, as long as the edge finder is still giving me the A-OK to look at it, I'd probably look at a possible position myself. Not financial advice ever. None of this is. I'm not here to do your homework. You do your own homework. And as always, trading is hard. Most people lose money. You probably shouldn't do it. It's that difficult unless you're as crazy as I am. Okay, so I like pound dollar on the long side. I also like Kiwi dollar on the long side. If we can get a bit more of a pullback there, let's take a look at that one. So I'm watching this at the 38.2. Both setups are, I'm looking for a bit more downside move. And the reason for that is when I take a look at the dollar index, right? Dollar index here, I would like to sell it, but I'd like to wait for a little bit more squeeze to the upside. We might get that, but if on NFP, but if we get that with a really strong jobs data point, to be honest, that might flip me to not wanting to short the dollar in the short run. I don't know. I'll have to take a look at it on Friday. Looking for oil buy setups. Ballout says, look at oil, man. That thing just keeps falling. If you were listening yesterday, we talked about, this in the short run, this breakthrough support looks really devastating for bulls. Because again, you're seeing lower highs, big breakthrough support. I would not be surprised if we see this thing continue lower for a period of time. My actual opinion on oil, I thought about this yesterday. I don't think the time is now, but in terms of more of a contrarian, longer term counter trend idea, I think that there might be some value plays on oil. But this, let me say clearly, this is not a momentum short-term fundamental idea. I'd be talking more about like, okay, if we dip down into like the 69, 68 range, I'd take an initial position, perhaps on some energy stocks, maybe Exxon, Chevron, etc. And if that tanks lower, this would be a small initial position with the idea of like building one for the longer run. But again, there's a very different approach there than what I talk about frequently with my own trading, where I'm more of a momentum trader. And if you're going to dollar cost average on something, to avoid blowing up, you have to realize that you have to have a lot of capital and you have to have tiny positions. That's the only way dollar cost averaging works. You also need to have a long-term approach because sometimes you're going to get stuck if you're dollar cost averaging. So I say that very loosely. Be very careful with that kind of approach because you need a lot of capital, a lot of patience, and very small positions, and accept that you're probably not going to make a lot of money quickly. So I don't like longs from a trading, a short-term perspective. From a longer-term perspective, you may start to get into value territory, like, okay, longer term, low 60s looks really interesting, unless you think we're going into a full-blown recession, right? If you think we're going to go into a global recession, then you do not want to touch oil because oil can go down to 20, right? In a really bad global recession, take a look at, we talked about this yesterday. Look what oil did in 2020, went down to like nothing. And then look what had happened in 2015, went down to 35, 29, maybe 20 is a little aggressive, but you can see like a long-term low somewhere around the 30s, 35s is possible if you get a real true like global slowdown scare. Do I think that's what's going to happen? Not really. But I also think that, right now markets are just a little bit fearful. And so there's probably some short-term downside, in my opinion, on oil. If you're long-term in nature, you might be able to find some good value in these areas. But personally, from a short-term trading perspective, there's nothing there. I also don't have any bias on the Edge Finder, so there's no short-term trade for me whatsoever. All right, let's look at TLT for just a quick second. Let's look at yields. So take a look at yields. Yields are continuing to trend lower. This is indicating that the market thinks the Fed's going to cut rates, which is pretty obvious, but it's been trending lower, meaning they think more and more rate cuts are being priced into the market going forward. 30-year yield, 10-year yield, 2-year yield. Russell's down 0.4%, NASDAQ down 0.1%. S&P's flat. NASDAQ and S&P are basically flat on the day. Big sell-off yesterday. I'm very curious to see if that follows through today or if we bounce. But again, that September seasonality makes me a little bit nervous for the indices. For gold, again, straightforward. I'm out of the trade. I'm long at around whatever this is, like 24.72. I will stop out if we break through the lows, and I'll trail stops if we start taking out the highs. So gold is just a boring wait and see situation for me. Also, guys, I just want to mention that if you'd like to get access to the Edge Finder, we're extending the 35% off sale until the end of this week. We've had some people who were kind of waiting on a paycheck to be able to pay for the Edge Finder. So if that's something that you'd like to take advantage of, the 35% off discount has been extended for a few extra days. If that is something you'd like to take advantage of, you can direct message us right now and speak to a member of our team who can answer any questions you have about the software. You get access to our top setups algorithm, which gets you, of course, all of our current watch list tools each day. These are generated automatically. The software pulls in sentiment, technical, and economic data, automatically ranks and files it, with its scoring system and generates our watch list. This is what I trade with every single day on my shows and live streams. So if you like my style, you're trying to incorporate fundamental analysis into your trading, I highly recommend that you take advantage of that discount while it's there. Again, it is 35% off of its usual price, and that is ending Friday officially. So if you're interested, send us a message. We'll give you some information about the discount. You can pay with crypto. You can do payment installments if that's something that's easier for you. And you can answer, or you can ask any question about the software that you'd like. We've got a couple trained representatives who can answer technical questions about the tool, how it functions, etc. So if you have any interest, please feel free to take a moment and chat directly with us there. If you're watching on Twitter, there should be a link pinned below the video. Or you can go to a1trading.com and open up a live chat in the bottom right hand of the screen. So we're a software business out of Atlanta, Georgia. We build tools for traders, and it is a one-time fee to get access to the tool. It's not a monthly recurring fee. It's a one-time access fee, and then you've just got it. And you've also got all of our future updates within the Edge Finder for free. So it's kind of a one-time payment, and you get access to all of our work, and we are constantly working to improve it. You also get access to the commitment of traders data, so on and so forth. So when we're looking at what institutional money is buying and selling. We also have the put call ratio, which is one of my personal favorite indicators on the Edge Finder, which doesn't want to load right now. We have the AAII investor sentiment survey, and here's the put call ratio. So, this is looking at the volume of puts and calls. So if you're looking to add data to your analysis, I highly recommend it. Many traders are out there just looking at charts or trying to read articles. I'm telling you, that approach is antiquated. Use data, use software to help you spot opportunities. It is so much more effective than trying to read 74 different articles a day to generate a fundamental analysis bias. Having data at your fingertips, clicks away from whatever you're doing, is ideal. So if you don't have a copy, again, you can send us a direct message using that link that was dropped in the chat just a moment ago. All right, let's see. Terms of where we're looking here, we've got 8 minutes to go, and then we've got JOLTS job openings. And for those of you who are just tuning in, we've got 760 people between Twitter and YouTube, and yeah, that's it. What I'm looking for here on the JOLTS job figure is to see, let's break this down. Let's make this kind of simpler. So with the JOLTS job openings here, if we get a number that is higher than this number, meaning more job openings, obviously that would be considered good. We are forecast to drop from the previous number of 8.18 million job openings down to 8.09. And again, the Fed has held their interest rates high for a good bit of time now, and that is restricting the economy. That is slowing the economy. So it is normal to see jobs data declining because the Fed is also expected to cut interest rates and sort of start to reverse that, putting the brakes on. They're expected to start actually letting off the brakes and actually starting to accelerate the economy through the use of reducing their borrowing costs through the overnight federal funds rate. So they're expected to cut rates. And so that effect will be very interesting to see how that plays into the market, because if we go into those rate cuts and the economy is doing this, like it's stable, then it is expected that the economy will reaccelerate and things will be good, and you'll get what is called a soft landing. Let's say that, this is the rate cut point. Well, what if you get this? What if you get the economy doing this before the rate cut? Many would actually argue that at that point, you're what is called behind the curve. You've made the move to try and save the economy too late, which would look like this. The economy would struggle and perhaps enter into a recession for a period of time before reaccelerating, right? So this would be the hard landing idea. This would be the soft landing idea. Right now, my opinion is we are more in this territory. There are some people who would argue that we're looking more like this. But this is why economics is so difficult. There's, people who have different opinions and look at different indicators and weigh them differently. It's just like everything else, just like every single movie that comes out, there's people who are controversial, or every single, sports game, there's controversy. In economics, there's heavy amounts of controversy as well. So how I see it is I generally think that the economy is not necessarily growing rapidly, but not necessarily plummeting either, and that rate cuts will likely lead to a reacceleration in the economy. However, my view could get thrown out the entire window if this week we start getting more evidence that the economy is slipping, right? So jobs data is one of the indicators there. So the first major jobs data point of the week is coming out in 4.5 minutes. That's why it is important. JOLTS job openings give us a bit of an insight, give us a bit of a pulse check on how the labor market is looking. Are we going to get the soft landing? Are we going to get the hard landing? This number is not binary. It's not going to tell you, oh, we're getting soft, or oh, we're getting a hard landing. But it is a clue. And that's all we can do with markets. It's all about educated guesses. So this will impact my thought on where things are at. If you get a big slide, let's say you get a number today that is much lower than expected. If we come in, let's say 8 flat or 7.99, right? Million jobs, as opposed to the 8.09, that would indicate to investors that, okay, wait a second, things are slowing at a more rapid pace than we thought. And again, would go back to concerns about, the economy is sliding before the rate cuts. So let's keep an eye on that. Again, I don't have a lot of positions going into this. I'm long gold. I'm long IWM, which is the Russell 2000 index. 3 minutes to go. What I'm looking for here is if we get jobs data that comes in line, or let's say it's 8.1, for example, 8.1 million, that I would say is a positive thing. That would say, okay, we're stabilizing before rate cuts. Positive. So what does that mean for the dollar and gold? As I know a lot of traders here watch indices and others watch gold, and everybody has their favorite. If you get a big slide in jobs data, that's positive for gold because it's weak for the dollar, right? Any open trades? Yes, I've discussed them a couple times. I pulled them up earlier. I'm long gold. I'm long IWM, and I've got some stocks that I'm just holding on to. So again, we got 2.5 minutes. And let me just reiterate, I say this every single news event. I'm not gambling on what's going to happen with the spike. I don't know what's going to happen with the spike. I'm reactive and going to take in this data and incorporate it into my trading approach, just like the Edge Finder does. I'm interested in I'm very interested in seeing how it impacts stuff, because it could, send the indices lower, or it could start to, signal strength in the labor market, which would actually probably be positive for stocks. Strength in the labor market, not great for gold, strong for stocks, strong for the dollar. You kind of just have to think like intuitively, strength in the labor market, how does it impact each market? But again, no offense, FMK, but trying to say like gold sell right before the news, we don't know what the data is going to be. If people out there knew what it was going to do, right, with certainty, gold already would have moved, right? We're waiting to see what the data point comes out to be. We don't know. So please be careful. I know a lot of people are listening or watching, and they see people in the comment section saying, oh, buy gold, trust me, or sell gold, trust me. Don't listen to that. I'm telling you, that is not how trading works. You're going to blow your money trying to chase and gamble on news events. Don't gamble. Intuitively listen to what this data tells us about the economy. Use it to your advantage. Okay. So we've got about 40 seconds to go here. I'm just pulling up our all markets view so that we can take a look at all the different charts at once for your convenience. We've got the S&P over here, US 30 over here, NAS right here, DXY. So that's the dollar index, euro, pound, gold, and oil. So we'll go ahead and roll our breaking news coming in here in just a second. All right. About 10 seconds to go for JOLTS. Let's see. if this has any impact. Could move it a lot, could move it nothing. We'll see how surprising or not it is. All right. Dollar index moving lower. Indices also moving a bit lower here initially. That would signal that JOLTS came in. Oh, let's play guess the game. Hold on. Is my sound? Yeah, it is. Okay. Guess the number. 8.03. That's my guess. 8.03? Come on, do it. There's one time where I got this so dead on, and James was like, dude, how did you do that? And I was like, it was luck. But 8.03, 8 flat. Oh, was it? Oh my goodness. Okay, I was wrong. Oh my goodness, guys. 7.67 million job openings compared to the forecast at 8.09. Oh my goodness. 7.67, guys. I was way off. I actually would have expected a bigger reaction than that. The dollar index is moving lower. Gold loves this, which is good for my position. SPX sliding, NAS sliding, dollar index lower here. That does not set us up well for Friday, at least. You know, NFP could show something different, but this is, again, we go back to what we just discussed. Sliding data would be considered concerning for stock market investors. And investors do not need concerning stuff right before rate cuts in the worst historical month of the year, September, which that was the title of my video yesterday. I thought I was pretty cheeky for that title. And somebody commented, they said, Nick, your titles are always on point. And I teared up a little bit. So I'm just kidding. But, you know, it is one of those things. It's like, okay, the market is already shakily, you know, waiting for the September Fed meeting. And suddenly now you've got a slide in economic data here that is not pretty for the scenario. We also saw revisions lower, revised down from 8.18 million jobs in the previous reporting. So now we've got it's a pretty big slide in jobs data here this morning, guys. Wow. Gold is up on that data point. Let's take a look at GLD. And I bet you IWM, my trade on IWM is not looking pretty off that. I mean, it's still a winning trade and I'm not going to lose money on this, but we may get stopped out today if IWM rolls over. Russell 2000 index. NASDAQ, S&P. S&P is still about flat. NASDAQ slightly in the red here. No massive, you know, look at that spike and reversal. My goodness. So we'll see how the dust settles on this candle, but still kind of for NAS just playing the news candle movement. This thing could be, you know, down to lows by the end of the 15-minute candle or completely reversed. That is the craziness of trying to trade the short-term, you know, charts on news data. But yeah. Lower numbers equals scared buying for gold. Well, it's that, but it's also just, okay, look, the dollar got really weak. That's good for gold. Why did the dollar get weak? Because that is weak economic data. So the dollar just plummeted off that, which, I mean, that's actually a pretty sizable move for the dollar. Look at this, guys. We are down to 101.32. Not quite back at the lows, and kind of a bummer because I was looking at possibly selling the dollar. But to be honest, I still might get my chance. I still might get the chance to. You know, this week is far from over. Dollar index could snap back and move higher into NFP. Or this could be a signal that NFP is going to be rough. So we will keep an eye on this one for sure. Definitely an interesting report there for sure. Let me just really quick check our live stream schedule. I believe we have James coming on, and then James at 9:15, Chris at 10. All right, cool. Cool. We'll go for a little bit longer, keep chatting a little bit about this, and see where we're at with this. But yeah, pound dollar, NZD, USD. May have missed this one again. We'll see. But if that rolls over, I'm still looking at pound dollar as a possible buy. NZD USD, same concept, looking for the rollover to 38.2% retracement. Then I might look for some buys. Nick, in the previous JOLTS news, do you recall dollar index moving this much? Remember that JOLTS, NFP, CPI, PMIs, all of them have the potential to move the markets a lot. So if, sometimes JOLTS moves the markets a lot, sometimes it moves it nothing. It's all about the surprise. As we just discussed, this had a surprise factor to it, man. That is a big slide in labor data. If it had come out exactly as expected here this morning, JOLTS would be such a boring event. So remember that it's not about the event as much as it is what it tells us and how surprising that data point is. This JOLTS job openings this morning was a little bit rough, right? That's a rough reporting for job openings, really sliding much lower than what was expected, right? So that's where you kind of have to think like, okay, JOLTS has the potential when you see a red folder event. A lot of traders who don't use fundamentals are like, oh, red folders, I don't trade them, or I do trade them. Like, it's not about the folder color. It's about what the data itself actually tells us about the state of the economy. And today's big, significant switch in the in our pulse check here on jobs, that's what's moving the market. It's not because it's a red folder or a yellow folder, or that doesn't matter. It's what is the data telling us? And if you understand how to read it, you understand why it's moving or not moving the markets. This is a bearish piece of data for the dollar pretty clearly. It's not the only data point though. So we have more data coming on Thursday, more data coming on Friday. Tomorrow we've got the services PMI and unemployment claims. Tomorrow's live stream will be very big. Friday's live stream will be very big. Also, wherever you are right now, if you're just tuning in, do me a big favor, hit the thumbs up button, subscribe to the stream if you are new. We are here Monday through Friday. Gold, big spike up on the 15-minute chart. A little bit of fading it now. We'll see if that where that candle closes, but this was a positive signal for gold, I actually think. And I'm glad that I'm just, still in the trade. This thing could reverse lower and take out the lows, but right now that's a good sign. Look how many times we've rejected this area of support. Seems like buyers want to hold it. Will they be able to? That's the question. For me, if we can break through the highs, I'm going to start trailing a stop loss further into profit. And if we can't, I stop out and take a loss. Canada's rate cut. Talk on Canada's rate cuts. 945. Let's take a look at the Canadian dollar. Forecast was 4.25, so it came in line with expectations. USD CAD. Dollar weakness. I don't actually know. I've not been keeping up very much with the state of the Canadian economy. They've got their press conference at 10:30, which will probably cause some swings. So it seems like it was expected to be cut. It got cut. And so that was, in line with expectations. The question then would become with the press conference, what does the Bank of Canada see going forward? But I can't really comment past that. I really focus heavily on US data, so I can't give you a full comprehensive view on USD CAD. It's also not on the watch list for Edgefinder right now, so I just can't really give you a full comprehensive view. All right, let's keep pushing on. Oil down almost 1% again today. My goodness. S&P and NAS. Look at that. Completely faded that sell-off. Came right back into where they started. Russell about flat on the day now. put call ratios back in kind of a optimistic state with the stock market. I'm curious. So the put call ratio rose yesterday. I want to look at TLT also. TLT. TLT, if we can get a break through the highs, I'd look for a retest personally. I actually like that a lot. Get some bond exposure again. Or perhaps a retest of support, but nothing to do current levels. Silver up slightly. Gold flat on the day now. Big drop for gold, came right back. And look at that now, S&P in the green here for the day. NASDAQ also slightly green. Russell flat now on the day. So we will definitely have to keep an eye on this. If we break through those lows, that's going to be my trigger to take profits on this one, but I would be happy to see it bounce back. You know, if we can start breaking through resistance and start trending up again, that would be that would keep me in the trade. So we'll see. Dow Jones. Dow looks honestly healthier than the other ones. Still sitting right around the highs. We also know that value stocks do tend to do well during rate cut environments. The thing is with the stock market specifically, I think you just have a rough couple weeks here. I really, it depends what happens with NFP. The market is kind of antsy about rate cuts. What kind of rate cuts are they? Are they good rate cuts or bad rate cuts? Is the economy going to slow with the rate cuts, or is the economy going to hold out before rate cuts? That's what we discussed earlier. So we will continue to keep a close eye on the data. I would say that JOLTS jobs data, however, this morning was not a positive signal, but it is the first of a couple different ones. So it's possible the market's just like, okay, this is not good, but we have a lot of data coming out in the next few days. So let's not get overly convinced one way or the other, right? So JOLTS is coming out today a little bit light. I wouldn't be surprised if the market is lower by the end of the day. Same with the dollar. Wouldn't be surprised if the dollar's, ends today red. Services is tomorrow, so that's huge. Unemployment claims tomorrow, that's huge. They've really come into very important. Anything with the jobs data now is very sensitive. And then the big one, of course, NFP on Friday. Again, if you guys are looking to get access to the Edge Finder, we've got that 35% off sale extended through NFP. If you would like to get 35% off the Edge Finder, make sure to click the link being dropped in the chat. You can speak directly to a member of our team to get access for that nice discount. You can pay with crypto. You can pay with installment plans. You can ask any questions you have about the software. If you'd like to check out our free course on the Edge Finder, you can ask them for that there. So if you would like some information about the discount, etc., please feel free to chat with a member of our team. And what that looks like when you do that is when you pull up the chat, it's not a robot, it's a real person. So just click the Edge Finder discount, start chat, and you'll be connected to a real member of my team who can answer any questions you might have about the software. And again, that gets you access to our top setups algorithm, all of our data screeners, all the economic data scanners, the commitment of traders data, put call ratio, retail positioning, all of it in one tool, which is the, I call it the engine of my personal trading strategy. I use it all the time to help me spot ideas in the market. And then I can use it to confirm, opinions that I might have. It's really been a game changer. Do you have any discount for the Discord group? Basha, yes. If you send us a direct message and just let them know that you were watching the live stream and looking for a discount on the Discord as well, just let them know and they'll hook you up with something. What is the website name, bro? The tool that I'm using is our software, the Edge Finder. a1trading.com, or you can chat with a member of our team if you have questions. All right, guys, we're going to now transition really quick, take a quick break, and then we've got Forex James taking over the show. We're going to be dropping a link to his website if you would like to check it out while he goes for a little bit here. And you can get some information by going to elitetraders.io, or stick around here for a few minutes, learn something from Forex James, get some great insight on what's happened in the markets. So we will be right back with James just after this. If you're someone watching the show right now and you're outside of the US looking for a better brokerage, listen up. I wanted to take a moment to mention today's live stream supporter, Vantage. Vantage allows traders outside of the United States to trade CFDs. You can trade everything from commodities like gold, you can trade US indices or global indices, and you can even trade FX all under one brokerage, and you can connect to MetaTrader 4 and trade directly on tradingview.com. Not to mention, they also have a really good sign-up bonus going on right now. So we'll drop the link to that down below in the chat, as well as in the description of this live stream. Check out Vantage. Now back to the show.
Hello. How are you all doing? It's good to be here. So just a quick note before we get started. I feel really sick today, so please bear with me. Might be a bit slower than usual. So to start with, I'm in Eurodollar short. I've been in this position for a couple of days now, I think, since the 2nd. Now this trade is actually mainly driven by seasonality, which you can see here. So what I want you to do is just pay attention. So we've had the 25th of August right here. So we can see we had this peak. So we draw our line from the 25th until the sort of end of September, roughly around this area. So actually we'll just be a bit more accurate here. So during this period from the 25th of August until the end of September, we can see over the past 10 years, we've had quite a strong decline. If we look at the statistics here, so if we were buying the market for the past 10 years on these dates exactly, we would have lost 9 trades. But obviously I'm shorting, so we need to inverse this. So if I was if I was selling this market at this exact date over the past 10 years, I would have won 9 trades. So if we take it back to the chart, if we look here, when was this peak? Actually, let me pull up the where is it? The date range here. So the peak right here was, if you notice, on the 25th. So it was on, and this is actually quite rare for seasonality, but it was on the date exactly that we had this peak, which was quite a good indicator for me, especially to say that at the moment, or at the time, I thought the euro dollar was very, very extended. So if we look back on the daily chart, I am more in the mindset here of a reversion trade. So I'm using seasonality along with just, again, at the time, the distance that we had between the 200 moving average, it was 3.21% above, which is kind of a little flag for me to start looking for potentially a short position. Now, there's also another factor here. You might see at the bottom of the screen here, the take profit, and in brackets, we've got credit agricole. Now, I'll show you why in just a second here. So this is my note-taking thing. It's on Notion. I write down everything essentially to do with the markets and what the institutions are saying. So inside here, we can see credit agricole from their bank report on the 30th of August. They are in short positions in Eurodollar, their entry, their target, and their stop. But I don't care about that. The only thing I'm interested in is what pair, what direction, and where are they targeting. So you can see they're targeting, very simply, the 1.06 level. So that would signal to me that, seasonality is bearish. I am more looking for a reversion trade. There's an institution already looking at this. They've given us their trade idea. So why not take a stab? For me, this is only half risk. It's only 1%. Normally I risk 2%. So I would consider this a half risk position. So, if the dollar does start weakening, as it more than likely will do, then, it's not an issue. And we've also, broken sort of structure here. So I'm looking really for the retest of this level. And then if we can get a nice convincing H4 bearish candle off here, I may add in again to round off my risk at a standard 2%. Gold. Yeah, we can have a look at gold. Let me just read. Let's see. I saw the same on the DXY. Looked in the last 10 years. For September, DXY was bullish 9 out of 10 years. Yes. Question. It's worth it for you to take such huge swings. That could be this month. I mean, this trade. Yes. So, without sounding rude, there is no reason to take long-term positions like this if you aren't trading with sort of a minimum of sort of $10,000 in capital. And this is just my opinion, by the way, so, take it with a grain of salt. However, this is what, 1 to 3. So if you're trading on $1,000, that 3% is not really going to do much, especially in such a long period. If you were looking to intraday trade or just swing trade on a smaller time frame, then, you might see more quick results. However, on the flip side, swing trading like this can be a lot more consistent because you have more time to manage the trade. You've got more time to get in, get out, and assess what's actually going on. So, for example, if I wanted to get out of this trade, I have, the next 2 or 3 days to get out. Whereas if I was scalping or day trading, I might only have a couple of minutes or a couple of hours. So, there's positives and negatives. But yeah, to answer your question, swing trading, is a lot more profitable, or sorry, I should probably say a lot more worth it if you have larger capital. But that's the same for all types of trading, really. The more money you have, the more money you make. So someone said gold. We can cover gold. So I was stopped out at break even, which is fine, to be honest. I'm not concerned about that. So I actually put a video out on my channel today about seasonality, and I used gold as an example. So I'll use it again here. I didn't mean to get rid of that line. So you can see I've got the orange line here on the 1st of October. And that's for exactly the same reason. Now I'm using seasonality quite a lot at the moment, so I'm not looking to get in any trades. So I'm currently in the planning stages, and this is sort of the plan. I'm showing you kind of how I approach the market to now, rather than trades that I'm in, because my portfolio is pretty flat. So the gold. Sorry, I lost a trail of thought there. Gold is very bullish. Don't get me wrong. Almost everything is bullish for gold. The only thing I'm a little bit cautious of is the distance of the 200 moving average on the weekly. Now, I've been saying this for quite a while, that I do see a correction coming, or some sort of mean reversion. We're almost 30% above. However, saying that, on the weekly chart, this can take up to 2 years. So the period we had here where we were above the 200 quite significantly, this was also about 30%. This took us 777 days to really sort of get back to this 200. So I'm not using that really as sort of a target or anything. It's more just one of those little alerts I've got in my head. Now, there's a lot of hold on, sorry, I think I've did I lose my tab? No, it's here. Okay, there's a lot of articles coming out about gold at the moment, and almost all of them are bullish on gold. However, they all have something in common, which is a bearish outlook for the short term, whether it's just a pullback or what, I don't know. I don't know exactly what they're looking at, but majority of them are to say buy the dip. And what I can see here is, again, if we look at the end of August until sort of the start of October, we have a very bearish period for gold, and this is over the past 10 years. Similar situation, we've got 9 losses. So if you bought gold in this period for the past 10 years, you would have lost every trade. So that's something I'm taking into account. So at the moment, again, this is just sort of the planning stage of trades. I'm not looking to really get into gold now until after this period, after this orange line. So once we reach here, that's when I'll be free to start looking to open positions. But I'm just using seasonality at the moment as sort of a guideline to avoid an unnecessary loss, because I don't see any reason gold couldn't come down slightly lower and have sort of a profit-taking dip, whatever it may be, whether it's just seasonality taking place, profit-taking, some dollar strength, you know, it could be anything. I don't really care. So yeah, it's just something that I'm taking into account with gold at the moment. I lost $3,000. Please help me. Sure, send me your PayPal. I'll send you $3,000, seeing as you're asking so nicely. I'm joking. Please don't send me your PayPal. UJ setups, no sells here. I actually just closed UJ. It was a bit of a painful loss, I'll be honest. I've been in long UJ since the intervention we had. And I've been sort of DCAing, to be honest. Today, after we had JOLTS, I can't be bothered holding that position anymore. So just accepted the loss, and I'll make it back at another stage. Can you share an analysis on GDPJPY? Yeah, we can have a look at GDPJPY. The thing I don't like about a lot of the yen pairs actually is this sort of pullback we're having. So this, you know, if I was looking to go short, this would make sense to go short here. We just touched off this 200 moving average. I'm not sure. We've not quite come back 50%, but we almost did. You know, it was close enough, really. And this is kind of the factor for me that I'm just a bit cautious of. The same with dollar yen as well. So be very careful, because the BOJ might not hike rates now, but you know, it is the BOJ. Same with the interventions. We don't seem to really get any warning of those either. So yeah, I'm kind of done with the yen pairs for now. AUD USD for sure. I actually quite like the setup here. The problem is I'm getting two conflicting entry signals. So for my intraday strategy would be kicking in here. So it would be, you know, prices just the moving averages just switched from a bullish trend to a bearish trend, obviously indicating a trend change. We've got the RSI that's overbought. Let's see, is this a fib? Oh, it is. It looks so good. We've just rejected, or we're currently rejecting this fib level. The problem is I don't want to go short, because technically on the H4 we've just bounced off the 200. And you know, the dollar isn't exactly doing too much at the moment in terms of moving to the upside. So yeah, I wouldn't really want to be selling. Wouldn't want to be selling. Sorry, again, I'm not feeling the best today. I'm getting a bit muddled up. AUD CAD, yeah, we can cover that one. I like the style of Forex James is trading. It is nearly the same style I trade, but I do it futures. Good stuff. It's so simple. It's just follow the trend, look for a fib. That's it. I mean, that's very simplified, obviously, but essentially that's it in terms of technicals. So the CAD just cut rates this morning. So long positions, ideally, just based off of that. Let's see what the Edge Finder says. Actually, I've not checked it today. Let's see if there's any news or anything to look at here. So AD CAD's not on here. Let's see what the data scanner says. Retail's mainly long. They've got a negative score. Seasonality's bearish. Trend reading's bearish. GDP's positive. PMI negative. Retail sales negative. So yeah, I mean, the current data doesn't really support a long position here. So actually, again, I wouldn't really mind going short, to be quite honest. Price is showing rejection at this 200 moving average. Stop loss quite tight, just above this previous little high here. And maybe a very sort of small position like this, just so a 1 to 2. But then, you know, again, the problem is this weekly 200 moving average. I don't want to sell into that because the 200 moving average essentially acts as a very, or can act as a very strong dynamic support and resistance. I'm not saying price can't break it. It's just I don't want to purposely go into short against the 200 when we're so close. So it's just small things like that you need to pay attention to. I mean, for you, it might not matter, but for the way I trade, I use moving averages quite religiously. So obviously I have to put a little bit of respect on them, especially when it's on the weekly time frame. There's a lot of things here. Pound New Zealand, US 30, oil. I will get to those in a moment. Let me just catch up on the chat here. Why would institutions be interested in giving retails free alpha? I personally don't trust anything they say. Ben, the bank reports aren't for retail traders. They're not. If you Google bank reports, you won't be able to get them. So it's not a case of, they just publicly publish it, but they legally have to. They have to submit what positions they're in. And bank reports are sent to investors. So for example, if I'm a client of JP Morgan, they'll send me their reports. And we get those reports. So it's not like they're sending it out to retail to try and grab stop losses. I can't decide what analysis tool I choose to analyze my charts. I switch between MT5 and TradingView. I like to analyze TradingView, but there are differences with candles and MT5. There's actually not. The difference that you're seeing is with your broker. So if you go onto IC Markets or 8cap or Pepperstone, whatever broker it is that you trade with on MT5, and you open the same chart on TradingView, you will see the same thing. The difference you're seeing is the difference of the brokers. My moving averages, the weekly and daily are 200, and the H4 and H1 are 50 and 200. Do you trade gold today? No. Okay, let me see what you guys want. Let's see, Pound New Zealand. Hi, James. Can you look at Pound New Zealand looking to potentially go short on a test of the daily neckline? Thanks in advance. The daily neckline. I am unsure what you mean by neckline, but I'm going to assume you mean sort of this level here. Let's see. There's no fib in play here. I do quite like that we're close to this 200, so we're kind of bouncing. I mean, it's not really bouncing off, but it's been respected so far. H4 is still in the downtrend. Really, we've created a lower low. We've got lower highs, and we did break below the support. So yeah, technically, I don't see much. Yeah, I don't think there is anything really here. New Zealand seems to be quite bullish, actually. So if we see the Edge Finder, we've got New Zealand dollar and New Zealand CAD. Register is bullish, although AUD NZD is bearish. So yeah, it seems like Edge Finder says New Zealand dollar's doing quite well. So shorts make sense if you are just looking at New Zealand. In terms of the pound, let's see. Pound actually seems to be doing okay today. So yeah, maybe not a bad idea. I mean, not for me, but I can see where you're coming from. Let's do US 30. What do you think about people saying trading is gambling? Well, trading is gambling, essentially. I mean, you can... And actually, I've had quite a lot of traders disagree with this, and I can't really understand why. So if you take a professional gambler, they take the statistics, they take the odds, they study, and they've been doing it for many years. And there's no guaranteed outcome. It's not like you're sat at the desk and you're guaranteed to get a paycheck. It's the same as trading. Maybe trading is slightly more, you can push the edge more in your favor because it is fully in your control, whereas, a roulette table isn't. But the markets can still do whatever. You can't predict it 100%. So I actually don't totally disagree that gambling is trading. Trading is gambling. But it's also very dependent on how you conduct yourself. So if I say, for example, I'm going in here because there's been 2 bullish candles, stop loss here, that's gambling because I've not done any research. I'm going off a very simple confluence, like saying that, the bulls hit black 5 times, it can't hit black again, so I'm going to go all in. It doesn't work like that. So there's a lot of similarities. There's more similarities than there's not, I'll say. But again, there will be people that disagree, and that's completely fine, because I guess some people find it insulting that their career can be sort of considered gambling, but it is what it is. It's just my view. Oh, yes, 30. Sorry, I actually didn't get into it. Let's see. So I know stocks are down at the moment. I keep seeing news alerts by Bloomberg. Stocks are down, investors are selling, blah, 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 blah. But yeah, I don't really like this candle we've just had off this resistance. Based on that alone, I wouldn't really be looking to buy. Although the trend is still bullish, technically, we have technically created a lower low. But in my book, that's not strong enough to say we've changed trends. So yeah, technically I'd be looking to buy, but I would need to see a break and a retest of this level really in order to buy. Or the other situation is looking for a pullback into this fib level and a continuation up. They're the only 2 situations I'd be looking to buy. The difference between a gambler and a trader is the same difference that exists between a wine taster and someone who's alcohol dependent. It's a psychological approach. You know what, James? I quite like that. I mean, I don't 100% agree, but I see where you're coming from, and I don't dislike that point of view. Trading is gambling with an edge. Even the casino themselves is gambling against the better. Any 1 spin roulette is a gamble for the casino of 1,000 spins. Exactly, Ben. You can, it's very, very similar to trading. And you can't control the outcome of your trades. I mean, you can do so much. You can manage your risk. You can move stops to break even. You can do a lot of things that you can't do in terms of real gambling at tables and things. But the concepts are very similar. Please explain the sudden market change. Well, we've had quite a few different market changes recently. I mean, we had a huge risk off move, then we had a bit more of risk on, and now we seem to be pricing in some more of the Fed decisions that's coming. So what we can do is actually discuss a little bit of data for a second. So JOLTS, how can I display this? Let's say here. Oh, so let me change the color. Can't see what that is. Let's put black. Okay, so JOLTS came out lower. So that means less job openings. So that could lead to a weaker NFP. Now, NFP on investing.com was forecast at 165. And that was, I think it was yesterday I checked that. So if we, now change, or we might see a revision in that forecast, or we probably will see a change in forecast now. And this 165, actually, I'm trying to do this as I go. Sorry, hold on. So this 165 was more than likely going to be a signal for a 25, a 25 basis points. There you go. That's meant to be a B. I'm not as good at drawing on here as Nick is. So this would, if we got 165 at NFP, this would have signaled to me personally, my opinion would have been more of a path for the Fed to start doing 3 cuts of 25. However, now the Fed has cut. Now we've had JOLTS come out lower, so this could lower NFP down to anything. I mean, I don't think we're going to get 114 again. I just don't really see that happen. I think that was more of an anomaly. Again, I could be wrong. I can't see the future. However, 125 to sort of 135, maybe. And again, this is more just a guess. That's all I can do at the moment. So these types of numbers here would more lead to a 50 basis point cut. There we go. I hope you don't mind these drawings. Sorry, let me actually, so if this was higher, so this situation hasn't happened. So we've not had the higher jolts, we had lower jolts. And this also could lead the unemployment rate that we have on Friday to be lower as well, thus backing up a 50 basis point cut. Now, on previously, I was again more edging towards the 25 basis point cut avenue. However, I'm starting to doubt that now a little bit and starting to reconsider. And I think the market might be as well, because the dollar doesn't seem to be too happy at the moment. You know, it's heading quite nicely to the downside. I hope that made sense. I know that was a little bit rough, but there you go. Do you stream every weekday? No, not every weekday. So I put videos out on my YouTube channel, and I'm on this. I'm on Trader Nick's stream 2 or 3 times a week, roughly. So sometimes you'll pop in here, and I'll be here instead of Nick or with Nick. What's your thoughts on AUD NZD? I'm thinking about to buy. I would not be going in for buys right now. And already I see why. And I was looking to buy as well. And I think buys are on the table. I am looking to get long, but not yet. So this is a good example, actually. I speak quite a lot about how I use the Edge Finder. So at the moment, I have a forecast of the Australian New Zealand being bullish. The way to filter this trade at the moment is if we look at Edge Finder, we can see it's still bearish. So a way to filter out these trades and avoid potential losses. I mean, doing this also reduces your, sniper entries, but it will more than likely over the long term secure you more solid positions. So what I need to do is wait for AUD NZD to flip into bullish. So at the moment it's neutral heading on bearish. So when we get Edge Finder bullish and my economics come into play, and the markets start heading to the upside. So for example, if we can break this high and maybe come down for a retest, Edge Finder swaps over, data comes into play, and I can execute here. Yeah, so something along these lines here. That's kind of the approach I take with this one. Lee James, I appreciate that. Thank you. I think it's short EU if it reaches resistance. I'm in EU shorts, so let's do it. NZD Asian asset, yes. So is the Australian dollar. Both of them are quite heavily affected by China. So something also to pay attention to there. Silver, I'm in silver longs. This was a quick sort of was meant to be a quick scalp in the Discord, but seems to be going on for a little bit longer than we planned. It's just a 1-to-1, really, or 1-to-3. A 1-to-1.3, I should say. My watch list been reduced quite heavily. So dollar Swiss I was looking at, and then I very quickly remembered that this is a very busy news week, and I'm very glad I didn't get in now. So I was looking to enter off this candle here, off the 50% pullback. And we had this bullish candle, and I was sat there and I was thinking, damn, maybe I should have taken it. But again, luckily, or not luckily, I shouldn't say luckily, it's not the right word. I was disciplined, in the way I trade, and didn't take it. Now, the reason I wanted to take it was because if we look at seasonality, again, very, very bullish. Again, if you were in long positions over the past 10 years during this period, you would have won all the trades. So it's seasonally very good, but at the moment, probably not the best time to be buying the dollar, especially for a short-term trade. It'd be quite easy to get chopped up, especially today. So that's why my portfolio is quite flat at the moment. I'm not looking to really hold anything into NFP because I don't want to get into a bloodbath. I'm quite happy to watch other people get into one, and I can sit and smile from the sidelines. Oil just flew. Let's see. I don't have oil here. Yeah, oil's moving quite nicely. Well, if you're looking at WTI USD or USO USD, which are all, crude oil against the dollar, then it's because the dollar's weakening. So obviously we have the base currency either going up or stable, and then we have the dollar, which is a secondary currency, moving to the downside, causing the asset to move to the upside. Basically, that's as simple as it can be. Thoughts on GBP CAD? Yeah, I was looking to go long on pound CAD. You can see it here, actually. You see my old drawing from one of the previous streams. Yeah, so I was looking to go long, but not so much anymore. This was because the Edge Finder was reading as bullish, but it's not at the moment, so not really interested. The problem is we're kind of just stuck in this range at the moment, really. There's nowhere for price to really go. So maybe I would look for longs if we could break out of resistance and retest and continue to the upside. But yeah, at the moment, it's kind of in no man's land. Zen, I just covered dollar Swiss. Rewind 5 minutes, you'll see it. But yeah, feel free to send any more questions. I think I'm the last guest on today, or I am the last guest on. So when you guys run out of questions, I might go, or before, depending on how many questions you have. I'm not going to sit here all day. As much as I love you guys, of course. WTI futures, USD, yeah, okay. So let me just have a quick look and see if there's anything interesting. I'm still in my copper position. This position is rough. So if you guys ever look at traders, whether it's me, Nick, any trader that you may look to for ideas or guidance, whatever it may be, and I know I don't mean that's come across big-headed at all, you will sometimes not see this side of trading, and when it happens to you, it can feel very, very bad. But this happened to me where I entered right at the tippy top and it just fell. So this one has been one of those trades where I was sat waiting for quite a while. I was waiting really for these monthly candles, these weekly candles. So we had these candles close quite nicely. This was a higher low off the the sort of range we had here. So yeah, it looked quite nice. And as soon as I enter, it turns bearish. And it's just one of those things, unfortunately. You can't avoid it. I'm still happy to hold. For now, it's more of a long hold position rather than a quick position. I'm not looking to get in or not looking to get out anytime soon. It's just a very poor entry. Up to your knowledge, what is an average monthly return for a good trader? Anything above 1%, or anything above 0% is good. So if you can do if your equity chart looks anything like this, you're doing well. And let's say this is 0%, and let's say this is 3%. God, I hate this trading view brush is awful to write with. So let's say this is 3%. So you're anywhere between 0 and 3% a month. You're outperforming almost every trader. So I normally get anywhere between 1 and 2% a month. I'm happy at that. That's that's good. And if you watched Nick's or even my video, we both made a video about Donvo. I'm not going to go into that situation now, but we both made a point about the monthly return he had for August, which was about 65%, I think. So his monthly equity chart would have looked something like this, which is a huge red flag. So what you don't want to do is sit there on the first of the month and say, I need to make as much as possible this month. I need to reach 10%. I need to reach 15%, 10, 20%, whatever it may be, because it's unsustainable. If you do that every month, you'll blow accounts. What you need to do is sit on the first of the month or the first of every quarter and just say, okay, this week or this month, I want to make 1%. And all I need to do to make 1% is have one good trade. That's it. You don't need to have a crazy 1 to 10 every day. You don't need to do anything outrageous. Just be that, sensible stuff. Chris Pulver is on afterwards. Is he? Let me double check. Before I came on, I was told no one's ahead of me. Oh, sorry, no one's after me. Just give me 1 sec. Let me read this. No, I don't think Chris Pulver's not on. Chris is on after me tomorrow. It was meant to be Nick Phillips after me today, but he can't make it, so you're stuck with me, unfortunately. Trading Nick on Words of Wisdom. Yeah, I'm going to watch that. That'll be a good episode. Hey James, what's your R&R year to date? It's really nothing spectacular. Off the top of my head, it's I think I'm up about 9% this year. It's been pretty poor, to be honest. I was really chopped up in the dollar yen situation and the Australia when the yen started rising. I was caught in that. That caused some losses. Also, the euro dollar hedging, the euro dollar DCAing I was doing wasn't the most profitable thing. So yeah, nothing to really shout about this year. But this year is probably one of the worst performing years since I've been profitable. And I can say it's probably the first year since being profitable I've actually learned some things. And it was, how do I explain it? So I guess if you put yourself in the shoes of a new trader, when you blow an account, you will learn something. Whether you actually act on it is a different thing, but you might learn don't short NASDAQ when it's rising, or don't short the dollar right before NFP, whatever it might be. You'll learn something. And again, whether you actually act on that information is a different story. But sometimes when you've been doing this for many years, that's obviously slows down because things become repeatable. Whereas this year, it kind of humbled me a lot because I got very complacent in the way I trade because it's worked for so long. And then it didn't work very quickly and it chopped me up. So that told me I need to be a lot more cautious and stay on my toes. And yeah, just wake up a little bit, if that makes sense. Oh, is Chris on? Or am I getting confused here? How much do you risk per trade? I risk 2% to trade. Can I also enter this trade? What trade? I'm not in a trade. Why is the stock market up today after we get negative JOLTS number? Good question. I'm not a stocks trader, but generally speaking, dollar down, stocks up, same as indices. So if we go and see, well, maybe not German 30, if we go and see the S&P, we see the S&P's heading to actually, maybe I'll be buying the S&P. Just noticed I quite like where we are at the moment. Let's see. Does this line up? Almost. It's not perfect, but that's okay. Yeah, maybe I'll take a small stab at the S&P. So if, as I said, I'm more leaning towards a more aggressive rate cut now, especially if we start seeing poor NFP numbers, maybe a long position on the S&P isn't a bad idea. Target the previous highs, go for a 1 to 2. I might do that after stream. Okay, I'm going to add this to the watch list, and maybe I'll act upon this one. We'll see. So yeah, guys, I think that might be it, unless there's any final questions. But I don't think there is. I'll give you guys a couple of minutes while I just read a message. Okay. What's your best year so far? Actually, let me see. Best year so far was early. It was quite early in the 2020s. Oh no, best year actually was 2018. Did 75% that year. And that was the second year I've been in business for elite traders. So I guess that was quite fortunate. Worst year actually was last year. Yeah, I did 10% in 2023. Actually, I'm just looking at my year on year here. It's on a bit of a downtrend. 75, 47, 37, 41, 24, 10. And this year hasn't been updated for the past 2 months. So let's ignore 2024. But yeah, past 3 years, my performance is trending to the downside, which I'm not happy about. How long? Sorry. How long are you trading for, and how long it took you to be consistent? I've been trading for 7 years. It took me about two years to be sort of break even, and then it took another 6 months to be profitable. So I spent that the first year was a lot of blowing money, blowing accounts, trying to learn and do it from YouTube videos and do it myself. And then I decided that I need a mentor. So I went and got a mentor. And that changed a lot of things. So yeah. Mandy, I only use Edgefinder to find a to find a bias if I am looking for a short-term trade. Normally, I like to look for longer-term positions. I like to look into the future. So if Edgefinder supports it, then great. But if not, then I'll wait. Edgefinder is actually more of my entry tool. And I know, again, I think I said this before, but I know Nick says it's not a timing tool. But that is kind of how I use it. So I'll wait for a nice level of structure, wait for the Edgefinder to ping in the right direction for me. And then I'll match it with other factors if there are any. Yes, always been. I do also day trade, but mainly a swing trader. I don't day trade that often, especially these days. Do you think the first rate cut will signal at the Fed we might be entering recession? I don't know. I'm not on the side of recession yet. We'll see. I think if we continue to see the news releases for the dollar to be weak and weaker and weaker, then yes, obviously. But for now, I think we're on sort of a middle ground where we very easily could, but not quite yet. Who is your mentor? My mentor is not on social media. You won't find him. He was a family friend. He used to work in Citibank in London. He was my uncle's friend, so I knew him through that. So not one of these social media guys. And when I say it was mentoring, it wasn't like we sit down for hours and go through my trading journal and he picks things out. It wasn't really like that. It was more of a casual mentorship. It was more of he would send me some breakdowns and some articles and analysis and research and things. He'd just tell me to explain it and break it down. And obviously I couldn't, so I'd have to go and search and be like, well, what does this mean? Or what does that mean? Or if this happens, how does that affect that? And if I was wrong, he'd tell me and explain it, obviously, but it was a lot more of a casual thing rather than a formal sit down in the office type of mentorship. Anyway, guys, I think that might be it. I need to go and take some paracetamol. My head is killing, and I want to get off the charts because this trade looks very tempting and I really don't want to trade. So if I sit here looking at this trade for too long, I might end up buying, and I'm not sure I want to do that. So guys, have a great rest of the day. I think, yeah, I'm on again tomorrow and Friday, I think, from what I remember. So I'll see you later this week or tomorrow or Friday, depending. And yeah, be safe. Hope you didn't blow too many accounts during news, and I will see you all later.
Thanks for tuning in to today's A1 Trading Show. Make sure to subscribe and to turn on post notifications so you don't miss the next one. Also, we're looking for more guests to come on the show. If you're comfortable being on camera, have trading experience, and you're looking to grow your audience exposure, we'd love to have you on. In the live stream chat and description below, we'll drop a link to apply to be a live stream guest and join in on the conversation. We hope to have you on soon. That's all for today. Trade safe, and we'll see you next time.